Registering your company in DIFC is a big milestone, but many founders are surprised to find that opening a bank account does not happen automatically. Even with your company fully set up, banks in Dubai have their own requirements and approval process. In this video, we'll show you exactly what to expect when opening a bank account for your DIFC company in Dubai. You will learn what documents you need, what banks are really looking for, and how to avoid delays and how to position your company for a smooth account opening process. Just because DIFC gives you credibility, but that alone isn't enough to get your account approved. Before we start, my name is Shiraz Baid and I'm the founder at Lepidus Wealth, where we help clients and families protect their assets using a range of tools including trust, foundations, wills, and offshore structures. So, if you own a business or real estate, don't wait until a legal or health crisis to start thinking about protecting what you have built. Instead, request your free and customized asset protection plan by clicking the link below. You can then implement it step by step as your journey progresses. The good news is that once you understand how the process works and what banks are really looking for, you can avoid unnecessary delays and get your account open within a few weeks. So let's walk through what happens after DIFC registration, how banking fits into the picture, and what you need to do to be prepared. When your DIFC entity is approved, you receive your certificate of incorporation, commercial license, and article of association. These are essential but not sufficient. Banks will also ask for a much wider set of documents during the onboarding phase. This includes details on company's ownership structure, source of funds, business model, and KYC documents for every shareholder and authorized signatory. The first practical step is choosing the right bank, and there are two categories here. The traditional bank like Emirates NBD, Mashreq Bank, and ADCB offers prestige and broad services, but they can be selective and slow when it comes to onboarding. On the other hand, digital first banks like Vio, Mashreq Neobanks, and some private banks offer faster onboarding but may have limits on complex international transactions. The right choice depends on your use case. Are you looking for daily operating needs, asset protection, or international transfers? Let's say you have selected your bank. Now comes the onboarding phase. This is where many bank applications fall apart. Banks will request a detailed business profile. They want to understand not just what your company does, but how it generates revenue, who your clients are, and where funds will follow from and to, and whether there is any elevated risk involved. For example, holding structure with no operational staff in Dubai may raise red flags unless explained clearly. Another key factor is substance. While DIFC does not require physical office space or local employees for certain structures, banks may still expect to see some presence on shore. A co working lease, a local phone number, or named director with Dubai residency can go a long way towards satisfying the bank compliance. That brings us to individuals behind the structure. All shareholders and signatories must provide personal documents, including passports, residency visa, Emirates ID if applicable, and sometimes a personal bank statement to show clean funds. If any shareholder is a foreign corporate entity, banks will demand full ownership documents up to the ultimate beneficial owner. You should also expect a video or in person interview with the bank. This is not a formality, it's where the bank forms a human impression of your intent, the transparency, and the seriousness of your business. You need to be prepared to explain your business model in plain, simple terms. If it's a foundation, SPV, or asset holding company, you will need to clearly articulate the rationale. Vague or overly technical answers often create confusion. There is also an issue of timelines. Even in the best case scenario, account opening can take between 10 to 20 working days from the time all documents are submitted. Any missing paperwork, unclear explanations, or red flags can easily stretch this to several weeks or even months in some cases. That's why we always recommend submitting a complete banker ready file from day one. Now, here is something important. If your structure includes a DIFC foundation, it's critical to position it correctly. Banks tend to be cautious with foundations unless they understand the purpose clearly. For example, if the foundation is used as a holding layer for multiple operational companies or for estate planning, that needs to be stated explicitly. Supporting documents such as the foundation charter and the letter of wishes can help demonstrate the transparency and the intent. Another tip is to choose the right authorized signatory. Banks often take comfort in having a local resident with the signing authority, even if that person is not the main beneficial owner. In some cases, assigning a professional director or corporate service provider with local presence can streamline the review process. Let's also touch on the banking outside Dubai. While DIFC companies can theoretically open accounts abroad, in practice, many foreign banks hesitate to onboard entities with no ties to their own jurisdiction. If you need a Swiss or a Singapore account, be prepared to show a meaningful connection such as investments, real estate, or frequent commercial activity in that region. The last piece is ongoing compliance. Opening an account is not the end of the story. Most Dubai banks conduct annual reviews. You will be asked to update your KYC, provide fresh proof of address, and possibly submit financial statements. Foundations and holding entities should maintain clean records and avoid large unexplained transfers, which can trigger reviews or even account freeze. So, while DIFC registration is a major milestone, it's not the final step. Banking requires a second layer of strategy. With the right preparation, you can position your DIFC entity as a clean, credible, and bankable structure. As I mentioned earlier, if you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long term financial security, you should really check out my next video right here.